Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Wednesday, May 11th. We're seeing losses to start the session on Wall Street. Stock futures gave up some modest gains following a report on March international trade. The U.S. trade deficit widened by a larger than expected 6% to $48.2 billion, the highest level in 9 months. The increase came despite a 4.6% jump in exports to their highest level ever. Imports rose by nearly 5%, and the U.S. trade gap with China grew to more than $18 billion. Earlier this week, China reported a $14.1 billion trade surplus in April, far surpassing estimates. The U.S. and China wrapped up 2 days of high-level talks in Washington yesterday, with agreements on the environment, intellectual property protection, and financial services.
The biggest name on this morning's earnings calendar is making a strong impression. Macy said its first quarter profits surged to $131 million from $23 million a year ago. Overall revenue at the department store rose 5.7% to nearly $6 billion. Macy's also boosted its outlook for profit and same-store sales growth for the full year and doubled its quarterly dividend, sending the stock more than 7% higher in early trading. But shares of Walt Disney are dropping 5%. After yesterday's closing bell, the media giant reported a slight decline in its quarterly profit, falling far short of Wall Street estimates. Disney blamed the miss on a disappointing performance at its film division. However, Disney did see improved advertising sales at its television networks, including ESPN. After today's closing bell, we'll get quarterly results from Cisco Systems.
American International Group is back in the headlines this morning. Along with the U.S. Treasury, AIG will sell a total of 300 million common shares in the market. Right now, the government owns about 92% of AIG, after bailing out the insurer during the financial crisis 3 years ago. The Wall Street Journal reported earlier that the offering will be in the range of $9 billion, at the low end of the $7 to $25 billion originally projected. Shares of AIG are 6% higher on the news. Meanwhile, the British banking giant HSBC is losing ground in U.S. and London trading. The company said it will slash as much as $3.5 billion in costs and review its U.S. credit card business and branch network. HSBC is trying to revamp or sell retail banking operations that aren't profitable enough to focus on faster-growing emerging markets.
Turning to the other markets, the dollar is moving higher against most other major currencies, in particular the euro. Concerns are mounting over Greece's solvency as the government tries to push through another round of austerity measures, including tax hikes and steep spending cuts. But labor unions are striking to protest the cuts, and yields on Greek bonds are soaring on fears that the country will have to restructure its debt or ask for another bailout to avoid default. Meanwhile, the dollar's overall strength is weighing on commodities. Gold and silver have both given up earlier gains. Silver had risen for 2 days after last week's crash of nearly 30%, but it's back down to around $37 an ounce right now, and crude oil is falling below $102 a barrel. That's the latest from Weiss Research. Have a great trading day.